Right, good afternoon everybody and welcome to the Green Innovation and Investment Showcase, which is being run in partnership with Scottish Enterprise and EIE. First I have to read out a few household messages. There's no scheduled fire alarm due to take place today. The fire warning is given by a siren sounding twice, followed by a voice alert message. If it does sound, you leave the room at the back here, turn to the left, and the fire exits. Turn to the right, and the fire exits are down to the right-hand side there. There will be a muster point at the Scottish Power substation located at Mitchell Street, next to the NCP car park. There are also refuge areas for those that have mobility requirements on each of the floors. Facilities are located on floors 2, 3 and 5. Okay, my name is Danny Helson and I'm one of the EIE team that's here today, along with my colleagues Karen Wood and Ronnie Johnston, who are at the back of the room. And we're also joined by Professor Dave Robertson, who's the Head of College and Science and Engineering at the University of Edinburgh, and Neil McGilvery, who's the Chief Operating Officer at the Bay Centre, where we're based. EIE is an investor readiness programme delivered by the Bay Centre, which is the University of Edinburgh's innovation hub for data science and artificial intelligence. We've been connecting investors and high-growth companies since 2008. We've always operated pan-Scotland, and in 2017 we opened up even further to extend our reach globally, and we are attracting companies and investors from around the world to take part in the programme. We're focused on companies that are seeking seed to Series A investment, and they undergo an intensive investor readiness programme over the period, which culminates in our EIE Investor Technology Showcase event, which is held annually each year. And I hope we may see many of you at EIE 22. You'll be hearing presentations from 4 companies this afternoon who happen to be EIE alumni. But first, I'd like to introduce Linda Hanna, Scottish Enterprises Managing Director for Economic Development. Linda.
Thank you very much, Danny, and good afternoon, everybody. And thank you for joining us as we take the opportunity to shine a spotlight on our really impressive investment and net zero focused innovation landscape in Scotland. I hope one outcome for all of us today is to build very much relationships and unearth new collaborations, primarily to take action. And if anything is coming out of COP for me, it's about providing us with that opportunity to secure a really lasting legacy for the environment and for the economy and for the people who live here. And it's our collective responsibility to look for solutions. There is a role for government, there's a role for business, and there is a role for everyone individually to look for those solutions. As we heard downstairs in the opening session, the investment landscape is changing globally, it's changing nationally, and it's changing locally. And the past 20 months or so, partly through COVID and all of the work around ESG, I think has demonstrated that rapid change is possible, and it's within all our gift, I think, to make some of the decisions that allow that to happen. Environmental and social governance factors are not new, but they are increasingly prominent. And again, the session downstairs, I think, talked about that and about how rightly important that is, that sustainable business practices go hand in hand with business growth and with success. And as we've heard talked about, I think as part of COP, really that kind of focus on people, on planet and prosperity, that kind of P cubed is really quite important around how those things need to come together to find solutions. Recent research has shown there's been really exponential growth around the number of business decisions being influenced by ESG, and Alistair and I in our pension fund were actually talking about some of the work that Scottish Enterprise has done around how we've been moving very much towards that. And 2020 was a record year, particularly for the industry, to look at industrial, energy and financial sectors. And we're really seeing those kind of big institutions start to double down on that. And the earlier session where NatWest were talking about their approach, I think demonstrates that. And we've seen certainly Scottish Widows as a great example with its recently relaunched environmental fund, which aims to deliver growth for savers by investing hundreds of millions of pounds in net zero focused businesses. So that appetite is growing fast, and PwC, one of the partners we work very closely, they're suggesting that climate tech investment has grown at least 5 times the venture capital market rate over the past 7 years. But it's been a long time in the making, and certainly something that Scottish Enterprise has been involved in for a very, very long time. These things do take time and they do take patient capital, and that's certainly something that we'll come back to as part of this session. Over a decade ago, Scottish Enterprise delivered our first low-carbon investment conference, a really heavy focus at that time around offshore renewables and harnessing the economic potential of Scotland's natural capital. And natural capital is coming back very much to the fore at the moment, not least with the focus on biodiversity as much around environmental focus. And ethical investment and low-carbon technology has always been very much on our radar, and Scottish Enterprise has been an early mover in this space. So ultimately what we are looking to do is to ensure that those net zero ambitions are understood and that the investment that happens delivers economic growth for Scotland. It's not one or the other, it's about how they work together to ensure that we deliver that success. And we need to work together to do that. We want Scotland to make sure that we continue to inspire leadership in green finance, to build on the reputation that we've got, and to become a really understood centre of excellence, particularly around green and responsible investment. And we'll continue to work tirelessly to do that, to make sure that we work with our partners such as Scottish Financial Enterprise and others to promote Scotland in that way, partly in the UK and partly in international. And the technologies that are needed to make sure that we deliver that, so the solutions that are required for net zero, they do require leadership, they require skills, they require commercialisation and scaling, all elements that we believe that Scotland has massive strengths in. But they also need a lot of patient capital. And what we certainly see is that money really does matter as part of the development phase, the scaling up phase and the growth phase for businesses and for industry. So Scotland's renowned as being a place of innovation, and over the last decade, Scottish Enterprise has invested more than £100 million in innovative renewable energy and low-carbon technologies alone, over £100 million. So a substantive experience and portfolio of the work that we've done, working with companies, places, and with innovation assets. And as a country, as we heard earlier, we are within touching distance of generating the equivalent of 100% of electricity demand from renewables and seeing continued progress in areas like heat decarbonisation, a great example at Queen's Quay with Star Refrigeration, managing waste circular economy, particularly in Glasgow, and transforming transport, not least around bus decarbonisation and the work that I've certainly been involved in around that, and also the Michelin Scotland Innovation Park are great demonstrators that help us to see that and see the private sector investment that's coming. And we know that we need to flex and adapt. So what worked 10 years ago isn't necessarily going to work now. So we need to think about those interventions and how they need to develop over time, whether that's about finance, directing finance into emerging opportunities, supporting market shifts, or looking at the investment in places that will allow some of those projects and companies to develop. We know that businesses and industries are, at different stages, and we know that the world around just transition is about ensuring that nobody does get left behind. So that kind of point around people and planet and prosperity acting as one is incredibly important in the work that we need to do. So we're determined to keep doing that. So they've got a lot of examples in terms of some of the work that we have done, and it would be remiss of me not to acknowledge and reference that, I think, as just some of the work that we've done. Maygen, as an example, alongside others that we've been able to invest in. Orbital Marine is another standout example, and the Orbital team have just also been selected to deliver the €26.7 million Forward 2030 project to accelerate that commercial deployment of floating tidal energy. So some great examples around what we've already done, and also I think about what we're looking at in the future. We're also going to be looking at how we green our most famous export from Scotland, probably, whisky. So you'll shortly be hearing from Celtic Renewables. Through their long-term support and investment, the company, which started life as a Napier University spin-out, has commercialised that technology, and what they're able to do now in terms of the biochemicals that they're producing from the byproducts from the whisky industry, they're going to be able to use that in terms of a really great example of a biofuel. And the company is officially now looking to open its commercial scale facility at Grangemouth, and it's been a fantastic opportunity for us to work with that company. We're also, as an investor, Scottish Enterprise, we're also starting to see some tangible financial returns, and we heard about that earlier in the session as well, that it is about doing good, but it's also about looking at how that delivers the returns that investors will be looking for. And University of Strathclyde spin-out Smarter Grid Solutions is a great example of that. So the company helps electricity operators automate the supply and demand of power, while also helping them to connect to the renewable energy onto the grid, something that we know was a barrier in the past in terms of some of the investments that were there. And the company's gone from amazing strength to strength since we co-invested back in 2008. And it's recently attracted the attention of and been acquired by Mitsubishi Electric, which I think is going to help the company to fuel even further the work that they're looking to do. So it's hugely rewarding to see these examples that we're having in Scotland, and I think having a spotlight on these examples is really quite important. So people need to hear these kind of practical examples, and we know that we want to do more. And next you're going to hear from Jennifer Donnellan, Director of Policy at the British Business Bank, and their smaller business policy and the transition to net zero report was published just before COP, and it's important for us in Scotland, not least because we have such a small SME, or such a large, SME base in Scotland, so small businesses are the lifeblood of our economy. So being able to take these types of reports, being able to use that insight is incredibly important for us around the actions that we need to take. And out of that report, I'll just kind of talk about that a little bit, cost was identified as one of the most significant barriers to these businesses. And because they are the backbone of our economy, that's something we're reflecting on in Scottish Enterprise. What do we need to do to help them to move quickly to become more carbon neutral? And how do we help them to access the finance, to drive more action, but also to drive action much more quickly and give them confidence to be able to do that? So I want to say a huge thank you to EIE, the University of Edinburgh, for giving me the opportunity to be here today. We do see that as a global flagship for data-driven innovation, and I would say that. And without them, we wouldn't be delivering part of this event today. EIE, as we've already heard, is attracting world-class investors to the heart of the data capital of Europe, and we truly believe that that is what Edinburgh and Scotland is, and that we can do a lot of work in terms of benefiting society to drive that innovation and investment that we're looking for. So, but we know we want to see more, and I guess the question now is, so where do we go from here? What is next, and how do we look forward? So I guess my kind of what I would want to leave the audience with is to think about the factors that we've got around skills, around innovation, around investment. Think about what we've already done in Scotland in terms of the examples that we've talked about, and what do we need to do to build on that next. We're committed to doing everything we can in Scottish Enterprise, and we're always good to hear ideas if you think we could be doing more. But in practice, what we want to be doing is much more around investing in the early stage. It is what Scottish Enterprise is known for. I've given you some examples today, and you might have heard of others. So the work that we do around our advisory support, the investment we put into companies, the connection that we help them to make to innovation assets and to organisations like universities and others is incredibly important. And we want to make sure that we continue to do even more of that. Within our green investment portfolio, which is showcasing somewhere else in the building at the moment, there are market-ready projects that are estimated to be worth around £1.4 billion. And that covers sectors from those that are environmentally sustainable commercial real estate to low-emission transportation and green energy. And there's a whole range of things that are in between. And we expect that to rise to market-ready projects worth around £3 billion by the end of 2022. So really significant numbers. The challenge for us is how we make every project, every company, every person that sits behind those projects come to life and make sure that that's creating a legacy for the future. So a brilliant breeding ground for investment, a brilliant breeding ground for collaboration and for action. And this showcase that I think it's downstairs, will give a real flavour for what Scotland has to offer and the additional opportunities that we can all play our part in helping to unlock. So I just want to kind of make sure that I leave a message around, we think we're doing a really great job in Scotland in terms of taking these things forward. The question is, how do we go further? How do we go forward next? So let's do more to support that, and that's our reason for having this event. It's really important that we have the opportunity to hear from others, get insights, get ideas, and to collaborate, and to take these ideas into demonstration, but also into commercial scale opportunities, and that's the really important thing that we're here to do, and leave that lasting legacy from COP that's about brilliant businesses, exceptional businesses, great projects, and that they deliver these net zero solutions, not only for Scotland, but for the world. As we heard earlier, you know, doing something in one locality has an impact everywhere else. So we're really kind of ambitious about ensuring that our solutions are actually going to help globally. So with that, I'm now delighted to introduce Jennifer Donnellan, Director of Policy at the British Business Bank, who's going to provide us with a brief insight into your recently released report, Smaller Businesses and the Transition to Net Zero. Thank you very much.
Great, thank you very much. Well, I'm really, really pleased to be here. The British Business Bank is the UK government's economic development bank. So we support businesses all across the UK, and the good relationships we have with Scottish Enterprise and Scottish National Investment Bank and others in Scotland is really important to us. And I think on this subject, climate change, more than anything else, no organisation, no government, no country can go it alone. So I think these strong relationships only need to get stronger as we move forward. So I'm really pleased to be here. The British Business Bank actually took on a new mission earlier this year. So we refreshed a mission with the UK government, and it now puts supporting businesses right at with their transition to net zero right at the heart of everything that we do. Now, obviously, that in part involves getting our own house in order, getting our own operations to net zero, getting our financed emissions to net zero, which is a big undertaking for any investor. But actually, the first thing that we did was start looking at the data that's available on how SMEs are thinking about net zero, where they are on their journey transitioning to net zero. And we realised it's actually a really quite underserved kind of policy question, really. There isn't a strong data foundation out there, and it was really very hard to find out much about the UK's SME population and how they approach net zero. So we set about a big piece of research. We published it kind of a few weeks ago now. It's on our website, and do have a look at it if you're interested. And I thought I'd just give you some of the key findings that could act as a bit of a frame for the conversation the panel are going to have. One of the key findings, which probably doesn't surprise anyone, but I think was always quite hard to prove, is why SMEs matter so much in the debate about climate change. So SMEs in the UK are responsible for about half of all of the UK's business emissions. They're responsible for about a third of the UK's total emissions. So if SMEs don't come with us on this journey to net zero, the UK cannot meet its net zero targets. It's pretty stark and it's pretty simple, and so there's a big job to do. There was some good news in what we found. The vast majority of SMEs, for example, have taken at least one physical action to reduce their carbon footprint. But that is really kind of the low-hanging fruit. Around half of them felt that it makes financial sense for their business to start looking at reducing their carbon footprint. So that's some good news depending on what your expectations were going into it. But I think fundamentally what you can't avoid is that the road ahead is really quite long, and there are some quite stark challenges. So over half of SMEs across the UK said they weren't ready to prioritise transitioning to net zero yet. And just 3% of our SMEs have measured their carbon footprint and have set targets to reduce it. So if we take that as kind of where we want all of our SMEs to get to, 97% of them are not yet there. We looked at some of the barriers that face SMEs, what they see as the barriers in taking action. I think cost you would expect to be one of the barriers. Lack of information was another one, and access to cash. So again, we took that as a really important finding on our part, and I think for policymakers to know that we do have an important role, investors have an important role, finance has a really important role to play in helping SMEs kind of take some of these steps. We also looked at some of the incentives, and again, really it was across the board. So finance is an incentive, tax, regulation, and access to information. So we really need quite a joined up kind of approach to supporting our SMEs on the journey. Now that's kind of looking at the SME population as a whole, and obviously that's a huge cohort. I mean, 99% of our businesses are smaller businesses. So what we also did in the research, and it's quite interesting, we've designed a segmentation approach that groups the SMEs into 4 different categories in terms of how they're approaching net zero. So there's carbon exposed, carbon complacent, carbon correcting, and carbon nimble. And I think that in particular, where we think could be really quite useful for policymakers and for organisations like us, kind of within the public policy sphere, because the different groups obviously will need quite a different support, and they're at quite different stages on their journey, and they have very different attitudes and instincts. So that we'll continue to build on as we go forward on our own net zero journey. And I just wanted to kind of end with making a link to the panel discussion that we're going to hear from, and some of the businesses we'll hear from, which is on a slightly more positive note, because I think that carbon nimble group is a really exciting segment of the SME population. And another finding in our research, again, I think not very surprising, but now backed up with data, is that newer, more innovative, more growth-oriented firms are more likely to prioritise transitioning to net zero. And I think those are exactly the kind of firms that VC investors are looking to invest in. So there is a real synergy at that kind of end of the SME population. So I think for the VC community, there's a real opportunity to be really kind of lighting the way for a lot of the rest of us, and to really show what can be done. And for those SMEs that they're investing in, likewise, to really show what kind of ambition in this kind of space looks like. So on that note, I'll hand over to the panel. Sorry, back to Dan. But I hope that's interesting. It's a long way to go, but we have a baseline, and we'll take it from there. Thank you.
Thanks very much, Linda and Jennifer. That was food for thought indeed. Food for thought indeed. Right, now, to get first of our company presentations underway, we'll be actually having a double-hander, and I'd like to introduce David Farker, CEO of Intelligent Growth Solutions, and one of his investors, Sanjeev Krishnan, Managing Partner of US-based S2G Ventures. Gentlemen.
So I've got my timer ready, Danny. Hello, everyone. Thank you very much. I have actually 2 investors in the room and one of my directors, so there are some American voices here who are going to talk to you about why Scotland. Brendan Richardson, put your hand up, is a non-exec and a former VC, now reformed, who I've known for 20 years. Sanjeev, S2G Ventures in Chicago, now publicly backed by Lucas Walton from the Walmart family. Jason Mraz is the managing partner of Osprey Ag Science in New York. So I hope them being here will be very useful to all of you. So I'm going to speak for a bit, and then I've asked Sanjeev to come up and talk to you about their journey to make this investment. They led our Series A round, and we'll be talking a bit about not just the business, but our Series B. This is a vertical farm. This is our crop research centre at the James Hutton Institute at Invergowrie, just outside Dundee. What you see here is a 4-tower system, 2 towers this side, 2 the other. A module to us is a pair of towers connected by a corridor that lets the robots in. That is our unit of economics, that is our unit of operation. And everything we do is based upon that. So we can sell you 2 towers, 20 towers, 200 towers. We can start small and take it really big. That is 9 meters high. We have a 6 and a 12 meter version as well. The footprint of one of those towers, 6 by 7, is 42 square metres. It will grow the same as 4 hectares of broad acre field. So we are reducing the footprint on the earth by 1,000. So the way we use it is a number of different use cases. First of all, as a seed to harvest, usually in an urban environment. It will probably be used to grow leafy greens, herbs, salads, microgreens, stuff like that. And that would just be the white box itself with the service area at the front. What we then expanded into was growing starter plants, because there is huge problems with that throughout the world. The strawberry industry alone in the UK wastes £12 million a year, throwing away 40% of all the starter plants it imports. So strawberries, tomatoes, peppers, chilies, all these kind of things, roots and fruit, soft and vine fruits. And then we managed to crack some roots. So we cracked broccoli, we managed to crack radishes, baby turnips, and so on. And even better than that, seed potatoes. The seed potato industry worldwide is a car crash, and places like sub-Saharan Africa desperately need a better supply. So you can see Andy Durston, our farm manager, up at Agrico's farm there. It normally takes 18 months to grow seed potatoes from a piece of germplasm. We did it in 75 days with no manual intervention. So no cold storage, none of that. That means that they can grow 4 seasons in 1 year, and that's never been anything like what people could do in the history of agriculture. So different kinds of application. Now we've gone into forestry, and we're growing 75 mil starter trees for the Forestry Commission in Forest and Land Scotland, and working now with the John Muir Trust to go into trees for rewilding as well. Super exciting. So wherever you are in the world, the problems in growing your food depend upon which climate zone you're in and whether you're urban, rural, or on an island. But there are about 11 or 12 big things that make it hard to grow your food. And the negative and ironic circularity is that now that travel's been curtailed, agriculture is the most polluting industry in the world. As the population exponentially rises to 10 billion, we are going to have to grow more food in the next 30 years than we have grown in the previous 10,000. I know that sounds impossible to believe. Look it up. It's a thing. So by 2050, that's what we've got to do. And we're losing soil, we're losing land the whole time because climate change, now largely caused by agriculture, is causing soil to blow away or get washed away. So our position in the world is as an enabler of agriculture everywhere. We do not grow crop for commercial sale. When I took this business over 4 years ago, I stopped that. So we now provide the tools to local farmers all around the world, regional farmers all around the world, which is part of our positive impact. So better tools, better picks and shovels for the gold miners everywhere. And what makes us unique are the 5 adjectives down there. So we are productized, it just comes out of the box. It can become industrial, it's scalable, so it can start small, modular, so we can switch bits of it on and off, and totally agile, so we can grow things this high, this high, this high, and so on. Every single one of the trays that are stacked 9 meters high is a microclimate. It can be 6 degrees Celsius cooler or warmer than the tray next to it. So when we make an investment, we always do so on the basis of having to tick 3 boxes. We call them the 3 E's. If you can't grow great produce, don't plant the seed. If you can't make money at it, don't plant the seed. If you're going to destroy the planet in the process, don't plant the seed. But if you buy an IGS farm, go ahead, plant the seed. So if we think about those 3 things, we now have, by a country mile, the broadest range of crops of any vertical farming solution on the face of this earth. You can see our baby trees, that's Norway spruce there. We have grown Scots pine as well, so that's our first native. You can see our seed tatties, strawberries and chilies. Those chili plants we've been harvesting for 3 years, and they just keep producing fruit. And on the flower side, we've done both edible flowers and now botanicals. And tomorrow, our French customer is going to announce a major deal to supply the global perfume industry with a special type of flower. So that's really exciting. Economics then. These are the prices. If I go into Sainsbury's, buy a 30-gram pack, that equates to seasonally between 30 and 35 pounds a kilo. You can see the prices from Spitalfields. We are 1/10 of the price of organic wholesale basil, and we are cleaner than organic. We don't drive diesel tractors around the place ploughing fields up. Thank you, Soil Association. Then the environment, our third E. So we claim 5 things. So because we put no humans inside this, it's all run by robots, we don't need pesticides. So we don't have to wash the crop. So we double the shelf life and kill off the waste. No hydrocarbons, not just energy, but no lubricants either. 0 emissions, according to Terry Ahern, the CEO of SEPA. So nothing in the air, nothing in the watercourse, nothing in the land. Because we can locate it anywhere, we collapse the food miles and taking that huge carbon out of the industry. And then finally, if you grow a lettuce in a field, you need 250 litres of water, 20 in a greenhouse, we need 1, okay, because it's all so efficient. So where have we got to under the pandemic? We've gone from no sales in the first half of 2020 to now 40 million and heading for 50 million. Our pipeline has increased in size 6-fold. We were on 1 continent, we're now on 4. We have deals that can take us to 6. I want us to get to 7. I want to sell one of these to an Antarctic survey. We've gone from, this is out of date, we're now at 150 people. And to the point about skills, we're actually 30 people shy of where we should be. We are running into skills issues, and we're thinking of opening a new centre in Glasgow to cover that. We've got a significant number of people, of women in STEM jobs. Some of them have come through the Saltire programme. We had 21 Saltire scholars this summer. We've retained five of them. Brand new crops and everything. And we've been cited in David Attenborough's new book, or our model has. The market is huge. It's growing very rapidly. This is where we were last year. This is where we are now, have signed deals and are building farms as of now, and this is where we plan to be by the end of our current business plan. So this is closing in on becoming a global business, and we are pretty much the biggest vertical farm company in the world, and we plan to do to become the de facto standard. So we're going to be talking about our Series B, which is partly why we're here. We set ourselves a target of, depending upon what you believe, somewhere between 15 and 20 mil was the lead. S2G, Osprey there, Ag Funder, these are, and then backed up by Scottish Enterprise, the Scottish Venture Fund. So they've all come back in again. We spent nothing marketing this. We met 70 investors, unsolicited, from 4 different continents, lots of them green and clean tech, and we received 300 million worth of term sheets. With valuations that were 10 times what our valuation was 2 years ago. And in the second close, we asked them to pitch us to explain the added value that they would bring. So the outcome of this, I'm not going to tell you, because the First Minister is going to announce it tomorrow for us. With that, I will hand over to Sanjeev, and you've got 2 minutes. Up you come. Thank you very much. By the way, The Economist just made a film about us. That's the clip, Blood, Sweat and Dreams, film number 1. Go to 11 minutes 53.
So I'm Sanjeev Christian. I'm one of the 3 board members here and one of the 2 investors in we led this Series A together with Osprey. We're a food and ag venture fund trying to make investments that make the system more sustainable and healthy. We've been around since 2014, and for what reasons David mentioned, we think vertical farming is part of the solution to make the food system more sustainable and healthy. So we're always looking for investments in this space. And I got a call 5 years ago saying, do you want to do this Series A in Tesla? And at this point, I thought it was a car company. And this company that's actually a potential customer said, no, the Series A Nikola Tesla. And I was like, what is that? And for them, that meant they were going to reduce the energy costs of IGS's technology. And this company basically, which is a potential customer of IGS, trialed it and basically reduced the energy cost by 50% and capital cost by 25 to 50%. And so, we sent someone in our team to go meet them. And we thought the technology was phenomenal. But we did not really invest in the company till David became CEO, because I think one of the key things that we've learned is not just about technology, but about leadership and people. And I think that was very critical. The next critical thing was that the Series A, we wanted a minimum first close, and that's where Scottish Enterprises was so catalytic. Because at the first close, it was just us, an ag funder, and Scottish Enterprise that came in. And without Scottish Enterprise's role, we wouldn't have been able to get that first close. So I'm very thankful for Scottish Enterprise. This was our first investment outside of the US and our first investment in Europe. And I'm delighted that it was in Scotland. And with that, I have 4 seconds left. So thank you very much.
So I've got a new telephone here. That's great. Thanks very much, Sanjeev, who rushed through a little bit just to keep us on time, which is great. Right, actually, I was just going to mention that Intelligent Growth Solutions came to EIE back in 2014, it was. It was a very early stage with the founder, Henry Aykroyd, at that time. But it's grown significantly since then, David, so well done. Our next speaker is Andrew Bissell from Sunamp. He was actually at EIE in 2013. And the company were back at EIE a few years later, but I shall leave Andrew to tell you more.
Thanks, everyone. Thanks for the intro. And thanks very much for the opportunity to speak. It's great to be here at an in-person event. You don't get a lot of those these days, but this is wonderful. I'm Andrew Bissell. I'm CEO and co-founder of Sunamp. We are the world leader in thermal storage technologies. By the way, just to be clear, we come from just along the road in Edinburgh, and we're proud of the place we come from. But you're going to see in a minute that we're also proud of the fact that we're a global company. We respond to a set of drivers. Those drivers are the ones you know. They're climate change, their sea level rise, their energy security. They're also some of the ones you maybe don't think about as much: fuel poverty, rise of the megacities, reduced space in homes. In some cases, incumbency. We challenge the incumbency of the combi boiler, which has so conveniently burnt fossil fuels to heat our homes and provide hot water for so long in places like the UK, Korea, the Netherlands, and so on. And we set ourselves some targets a number of years ago, about 15 years ago, that we would be part of the army, if you like, that would cut out the burning on demand of fossil fuel, that would link renewable electricity to heat, that would enable renewable heat in all its forms, and would importantly be fully affordable. And against that set of challenges and targets, we're really pleased at how rapidly the decarbonisation of electricity has been progressing in the UK and in other countries, and in Scotland particularly fast. And we're on the verge of effectively, on an annual basis, 100% decarbonised electricity, and that is absolutely fantastic. And that is one of the drivers and the forces. It brings with it a challenge, which is the challenge of intermittency, the ziggy-zaggy line. And we help put that back into a manageable context. When people think about energy and they think about energy storage, they often think about electricity, which is actually one of the smaller pieces of the pie. The biggest piece is heat energy in all its forms: process heat, space heat, hot water, and cooling. We address that piece, and we also help the electrification of that energy. And so we foresee, and we work towards, a world decarbonised by affordable, renewable energy sustained by compact thermal storage. We think it's a foundational technology. So what do we make day to day in our factory? We turn out these modular, cuboid, compact thermal batteries that are extremely energy efficient. It's underpinned by science from the University of Edinburgh, developed with UK national science facilities at the Diamond Light Source. It gets a 4-fold energy density advantage compared with what went before, which was essentially hot water. We've achieved something completely unprecedented for this kind of technology, which previously was doing 10 cycles or 100 cycles. We achieved 40,000 plus cycle stability, which means effectively we have a material which on a hot water cycle of twice a day will last for over 50 years. We don't guarantee our heat batteries for that long because we don't have the experience for that, but we do guarantee them already for 10 years, including every component. We have super reliable fast heat release, low-cost sustainable sourcing, and that's very important because lots of our competitors use palm oil and other things that we don't want to name. They're non-flammable and they're non-toxic. And we're very proud to present this in essentially an infinity loop, because while it will not last forever, it's going to last for a very long time. And we reuse the material at the end of product life, and we put it into fresh heat batteries. And so we can easily foresee that centuries hence, the same material that we're making today in a little plant just outside Edinburgh may well still be in use in fresh heat batteries. And what does that mean in practice? What it means is something which is about 4 times smaller than the incumbent technology that we displace, the hot water tank, and arrives at a similar size to the combi boiler that we're really intent on displacing. In practice, what that means is that we can help today with the decarbonisation of hard-to-decarbonise properties. These tower blocks, 7 of them in Sunderland, another 27 in Leeds, and more to follow, have combi boilers in them, in a little narrow 400mm wide cupboard. If you want to decarbonise them with heat pumps, which is in fact what happened here, you can deploy a ground loop, you can deploy heat pumps, and that's fantastic. Problem is, you would need a great big water cylinder. Where would you put it in that property? And the answer is you don't. You put a heat battery. And the heat battery enables the heat pump, this heat pump here, to do the work. So we are fundamentally an enabler of renewable heat and electrification of heat. And we can do the same for air source heat pumps. We work with a very wide range of heat pumps from a very wide range of manufacturers, sometimes in very close partnerships, sometimes just by making it compatible, and sometimes completely secretly, and in things that I can't tell you about today. We're also scaling it up. You know, we have demand, a lot of demand actually, for megawatt-hour scale plus storage. That's now served by our central bank product line, and that central bank product line will be coming to market in the first half of 2022. We're global. We are absolutely global in our ambition, but we're global in our execution. We started actually some of that globalization with EIE. EIE Shenzhen, in 2016 was our launch into the Chinese market. We then engaged relentlessly in China. And today, literally today, this morning, our board signed, and some of our board members are here today, signed a deal in Shanghai which is for £50 million value over the next 5 years. That's a kind of sneak peek of what will come out in the press release. So, please keep it silent for now, but we're pretty proud of that. We earlier this year, about a month ago, we completed our first licensed factory deal in Korea. So that's a complete copy of what we do in McMurray, just outside Edinburgh, transposed. All the key IP comes from Scotland. We export a concentrate to that factory from which they make the phase change material, the energy storage material that goes inside the heat batteries, and they make them to our designs using our patent portfolio, which is very extensive. And we've just also signed a contract with NYSERDA, the New York State Energy Research and Development Agency, in New York, obviously, to run 8 commercial demonstrators. And that's almost fully subscribed now with leading energy utilities and OEMs joining us in those demonstrators. We're 15,000 heat batteries into production. We are accelerating that pace rapidly. And we have key OEMs and distributors signed up. Here's a quick picture of the Korea factory. I want to talk a little bit about funding. About 60% of our total funding to date has come from Scotland. We've been supported by University of Edinburgh itself, that's the source of our key source of our technology, by Scottish Enterprise, recently by Scottish National Investment Bank, who are playing a cornerstone role towards our Series B. But also we have global investors. I'm delighted that Victor Aguilera from Auras Capital, our Series A lead from Chile, is here today. And as you can see, we have global investors, and we intend to have more global investors as we go forwards. And finally, we grew our order book, similarly actually, to David, 500-fold during the pandemic to over £100 million. We're targeting about 1 million products a year, £1 billion a year by mid to late this decade. I've put quite a late date there. We're really trying very hard to accelerate that. And there's a strong reason for that: climate change. You know, we need to disrupt this fast. Scottish National Investment Bank came in to underpin our Series B, and that will be launching shortly. And thank you all very much. Appreciate it.
Thank you, Andrew. Before I forget, David handed me a note to say that you can see the farm, the vertical farm at COP26 at the Educational Pavilion, which is at Broomlaw between Carrick and Calpine. And the what 3 word search for you is plant, fades and weedy. Thank you, David. So Andrew, look, thanks very much for that talk as well. Thanks for the mention for Old College Capital at the University of Edinburgh. Quite often we get comments that has the university put money into the university companies that come out. And I think you were saying, I hope it's okay to say this, that Old College Capital were there when there were fewer proof points than might be attracted to some investors and helped us get there.
Actually, what they did was they followed the science.
Yeah.
They understood the science from the inside and they followed it. And that was really important. Following the science is critical.
Great. So thanks for that, Andrew. Yeah. Now, a man who was both at EIE 13 and 14, that the 2 previous companies attended, but he was also at an EIE London event that we ran in between. So I'd like to introduce Mark Simmers, the CEO of Celtic Renewables.
Great. Good afternoon, everyone. Like the other speakers, delighted to be here to an in-person event and really honoured to be representing Celtic Renewables at the Green Investment Showcase today. So Celtic Renewables is commercialising and scaling a patented process technology that converts biological residues into high-value biochemicals and other products the world needs. There's always, in the renewables sector, a huge focus on energy, on heating, but no one's really tackling the issue around how we deal and decarbonise chemicals. So our innovative low-carbon solution actually is an adaptation of a century-old ABE process, but using residues rather than crops. And ABE stands for acetone, butanol, and ethanol. And the main 2 solvents, acetone and butanol, almost entirely come from fossil fuel at the moment. And they're used in processes and in products that touch our everyday lives across healthcare, across cosmetics, personal products, cleaning products. And in order to decarbonise those sectors, they need to decarbonise the input solvents that are going in at the front end. And we can provide a bio-based direct replacement for that. I think like the others, our vision is to be a world leader in ABE fermentation as a global sustainable industry. And in order to achieve that, we want to drive forward the development of biorefineries strategically located around the world where there are waste and residues to produce these solvents that are based on our process. But being born in Scotland, where we were formed sort of 8 or 9 years ago, our initial focus is on the leftovers of whisky production, draff and pot ale, and on reject potatoes. And as David said, the seed potato industry has a huge amount of waste at the moment, and we can capture that and convert those into our products using the process here. Very similar to a brewery on the front end and a distillery on the back end, but we're producing these bio-based solvents instead. But what works for whisky residues, what works for reject potatoes, works for the residues of many other food and drink industries, agricultural leftovers, and even things like recovered paper and cardboard. So the opportunity here is truly global. So where are we at the moment? So we have just finished the construction of our first plant in Grangemouth, about half an hour from here. This £24 million construction project has been going for the last sort of 18 months. And it's a massive landmark for the company to reach this point. Commissioning started and we should be operational in the next couple of months. A lot is talked about the just transition from a petrochemical-based economy to a bio-based economy. And I think this is a fantastic example of that. This plant, which is making bio-based solvents, is located on the old ICI petrochemical land. And actually, we've just tripled the size of our team, and a lot of them have come from petrochemical background, bringing their experience and their skills, but with renewed purpose. And I think it's really important that we can be a shining example of that. We did an announcement of our construction in the media just last week with Muir Construction, our principal contractor. So going to our products, so these solvents have massive global markets, millions of tons consumed each year, and as I say, the vast majority of all these solvents come from fossil fuel at the moment, with a whole range of uses. Delighted to announce today, and it'll be in the press tomorrow, so another first is that we've signed our first customer agreement with Caldic, one of Europe's largest chemical distributors. It's a multi-year, multi-million-pound deal that will buy about 60 to 70% of the inventory from our first plant, and we've got more customer announcements to come in the coming months. Caldic and our current investors and also our stakeholders, I think, really believe in our proposition, because it's not just about making these bio-based solvents. We've recently undertaken a new life cycle analysis, which has actually shown, compared to fossil fuels, we offer a carbon negative solution with these solvents. So if it's going into pharma, if it's going into cosmetics, then as a source solvent, it's really driving down the carbon footprint of those processes. But as everybody in this room knows around investment, it's not just about being green, it's about being commercially viable, commercially competitive. So running the numbers on our future scale biorefineries, we can see an excellent IRR that we can deliver as part of that. We're also a great example, I think, of the circular economy, of being really resource efficient. You can see from our process diagram, we're taking in waste and residues, and there's really no waste coming out the back end. So just to talk about the investment so far, we were formed about 9 years ago. We've raised about £37 million to date. A lot of that has been to build our first plant. The ecosystem in Scotland is fantastic for startup businesses. We have great support from the likes of EIE and particularly from Scottish Enterprise. And finding that initial startup capital, I won't say it was straightforward, but it was relatively okay to do. The journey to try and fund Plant 1 has been incredibly tough. And I think a discussion for the panel is, our experience is that there's no interest in the VC market to fund a pre-revenue infrastructure company like us. And that's been incredibly difficult. So what we ended up with support from our high net worth investors was a package that we had to pull together, a pretty complicated package, working with high net worth investors, fantastic support from Scottish Enterprise, and actually a huge degree of crowdfunding, both debt through Abundance, and Louise Wilson from Abundance, one of our investors, is here today. And without their support, we raised over £6 million of crowdfunding through Abundance, which was just a game changer. And we've also done an equity round through Crowdcube. 4,000 crowd investors have come in to support Celtic Renewables. And that's just been an incredible vindication of what we stand for. And I think the attitude of the man in the street, the person in the street, in terms of what they want to see their money invested in. So that's, we're just launching a crowd raise actually this morning to help fund the next stage of our growth. So we've been through R&D, pilot scale up, and the development of our first commercial plant. The next stage is really rolling out the technology internationally. And we see ourselves as basically an IP-backed developer. So we've got the capability in the world-leading science. We've designed the process around our how we bring that and deploy that, the experience of constructing a plant, operating the plant, and taking the products to market. So we're already looking at about 8 or 9 opportunities around the world in terms of where we go next with those multiple sectors, be it food, drink, agri, residues. But we reckon there's a potential to build 50 to 100 of these biorefineries in the next 10 years. And so looking at how do we deploy the capital, how do we form the joint ventures, how do we partner up and collaborate with people to make that happen. It's really important that we do that. You know, there's very healthy returns available from these biorefineries, but also if we're going to move from being a fossil fuel dependent economy to a bio-based economy, you know, this scale up, like ours, has to happen quickly. We're incredibly driven and passionate about the vision and mission we're on, and we'd love to hear and work with others who want to help us realize those. So thank you very much.
I'd like now to welcome Kerry Sharp, who will chair the investor panel discussion. Kerry is the Director of Growth Investments at Scottish Enterprise. Kerry's team provides commercial equity and debt to early-stage innovation, high-growth SMEs in partnership with private sector investors as part of Scottish Enterprise's tailored specialist support and funding to early-stage entrepreneurial businesses. Scottish Enterprise has been increasing its focus on supporting companies with net zero ambitions, as well as direct investment into low-carbon technologies. Kerry.
Danny, thank you very much indeed. I'm delighted to be here to chair our panel this afternoon on this whole issue of accelerating finance into net zero technologies. Unfortunately, I do have the inevitable task of keeping us to time. We don't have a huge amount of time left, so I'm going to have to keep moving people along, so my apologies in advance for that. Before we kick off some questions, I'm just going to ask the panel to introduce themselves. So over to Ian, first of all.
Thanks, Kerry. I'm Scottish. I'll speak very fast. Ian Watson from Climate Tech Capital. I'm busy trying to raise a new fund to invest in this space. We've spent the last 12 months building a pipeline throughout Scotland, working alongside some of the, the universities and the catapults. We're trying to raise £60 million to invest in both the late seed and the Series A space.
That was efficient. I'm Jason Mraz, president and co-founder of Osprey Management. We started our business in 1999, and through the arc of my career, I've gone from very liquid trading in the agricultural products to less liquid private venture investing. I like to say, as I've gotten older, I go earlier stage and more entrepreneurial. And I'm here because IGS is the prototypical investment in our ag science portfolio. Great product, great management team, and helpful to the whole planet.
Pat Burtis from Amadeus Capital. Amadeus is a venture capital firm headquartered in the UK, founded in 1997. I joined in 2006, actually, to start up our clean tech activities. Those of you who were around in the first clean tech VC wave will remember how that went. So it's quite interesting now to see some influx of capital coming back into the sector, and I hope we can talk about that today. I live in California, and I spend most of my time investing in Latin America, actually, not entirely around climate or sustainability, although there's a lot of intersection there in what we do. So I'm very happy to be here. Thank you.
Yeah, it's Greg Herrera, Senior Partner and Managing Director for EV Private Equity in the UK. We've also been around for about 20 years. We are a specialist investor in technology-led businesses focused on reducing greenhouse gas emissions. We've made about 25 investments in the UK since we've started, and are looking to build a range of symbiotic and interconnected technologies around reducing greenhouse gas emissions. Thanks.
Super. Thank you very much indeed. So just to open up our questions, so one of the things we heard actually Linda quoted earlier from PwC, the pace of change in climate technology has never been seen before, so it's extremely rapid. And we've heard obviously from 4 really exciting, ambitious companies who are doing great things on our aim towards net zero, and clearly raise millions of pounds in investment as well. So we might be guilty of thinking it's all okay. but I don't think it is, and we read a lot of things that say it's not, and that's one of the things I want to talk about first of all. So the International Energy Agency say in their report last year that a major acceleration in clean energy innovation to meet our net zero emissions targets is essential. So we're not going to achieve them unless we accelerate. So the question is, how are we going to do that? How are we going to get more funding? And we need to accelerate more innovation, and we need to fund that innovation. And one of the things we hear a lot is that there's a concern, and we've heard some of it today, about where investors will invest and whether they've got the appetite to invest at the earliest stages. So maybe over to Ian first of all, if I could start with yourself. So do you think the investment models are right for this space? Do we need to change anything?
Well, I think the fact that I'm trying to raise a new fund probably means that there's definitely a gap here, and that came about through myself and 3 other people who are starting the business, having worked in this space, seen, I guess, a lot of good funding that's going in at the early stages from a combination of, I guess, governments, catapults, Scottish Enterprise in Scotland, plus some of the investors, angel type of investors, but generally in the £1 to £2 million space. But even before that, a lot of it, as we've heard, is incubated in the universities. So these are great sources of capital, and I think there's a change in some of the models. So while the universities themselves will put in some of the capital, they will have endowment funds that are also basically working alongside them. And what certainly I'm seeing in some of the conversations I've had over the last 12 to 18 months is those endowment funds starting to partner up with the private sector. So you're probably right, there's large swathes of infrastructure funds, and I've worked with those in the past, that just won't invest at the earlier stage. And they won't invest because they won't get out of bed for investment sizes less than 50 million. So they've got to do big offshore wind or big solar. And what I guess we're looking at here is the convergence of technology, software, hardware. So it's something slightly different, and it's hard for them to get their heads around. To get their heads around also the, I guess, the models of risk as well, which apply to that. So not all the investments are going to succeed. So, if you compare that to RBS, who we heard earlier on, where, they will do structured loans, the profile is really different. At the venture capital stage, you do have a lot more sort of risk. So I do think we're seeing a change in that type of model. And I guess from a Scottish Enterprise point of view, you've followed something like this for years in terms of, putting early stage funds at work, but actually looking for some of the companies to come in and actually match that, or looking for the funds to actually do that. So certainly what I've seen is probably more and more people starting to look at this sector. I think there's a recognition of what is required to do the hard bits to get to net zero. So there's lots and lots of projects going on which will do the generation, but it's how you tackle the other parts of the sector, whether it's agriculture, heat, in the transport sector. So we need the new technologies to do that. We need people to invest at that stage. And we need people to think about how they're going to structure their funds. So when we started off, we were purely a Series A fund 12 months ago, and having gone out and spoken to the market and spoken to lots of companies and started to build the pipeline, we're now at the stage where we're probably going to put 30% of our fund into late seed. So some of the companies either not quite at the revenue stage, or some of them, possibly at revenue stage, but it's iPhone 0.5, and that's not where they'll ultimately be in a few years' time. So I do think there's a new model, but we definitely need an acceleration. I'll say one final point, and then I'll pass it on. So when we've been doing our fundraise, we have been out and we've spoken to the institutional type of funds. And again, unless they have a particular alternative asset strategy, particularly for a first-time fund, I would add, it's hard to get the funding from that. So as much as I, in my deck, when I go and pitch, have a sort of spectrum of investment going from VCs to infrastructure funds to the capital markets, trying to bring the capital markets into the early stage at this point, I found actually quite hard because of the profile of risk and also because of the size of investment.
Yeah. And maybe if we could just turn to Pat to ask a question. Mark made the point that commercial demonstrators, or even pre that, are incredibly difficult to get funded, took quite a while to get there. What are your thoughts, in particular from a US perspective? Are there other models that we should be considering that we can encourage further funding to flow into these areas to really make a difference?
Yeah, I think there's a lot of areas where I guess both regulators and policy and to some extent government-backed finance can help. So starting with supporting basic research at a much greater level than is currently being supported. So venture capital, basic research, the timelines typically are so long that it makes it commercially non-viable. So most venture capitalists want to see something that's reasonably close to getting to market before they can invest. And so there's this big gap in terms of what can be supported. Secondly, sort of de-risking. I mean, I thought the example of Celtic Renewables was emblematic of the problem. I mean, we looked at many investments with sort of industrial style facilities, and the reality is if it's a first time technology being commercialized, who's going to insure it? Who's the EPC contractor who's going to take it on? What project finance house is going to take that? I mean, it just, you're inventing the wheel again. And so there's clearly a role for government to step up there and say, hey, you know what, we'll de-risk this. The project returns are good enough if we can cover the risk to get that to help back that. Thirdly, I think on the innovation side of things, there's a lot that can be done by the industry regulator. So people talk about, oh, policy needs to help enable this. Policy, like we're seeing in the US, obviously moves very slowly and sometimes doesn't move at all. So as you all know, we're having a very difficult time getting the climate package passed for political reasons. What can be done is actually at the industry scale, and this can be state, it could be federal. The example I would give is in financial services. If you look what's happened in fintech over the last 5 to 10 years, in many countries, including where I work in Brazil, where we're very active, the regulator there has done a great job of creating sandbox environments, special banking licenses for fintechs, really opening things up and allowing a much more competitive environment. And I do not see that happening in the energy industry anywhere near the scale that it needs to happen. So I would add those things. And then lastly, driving adoption. And this, of course, is very industry specific, but there are many incentives that could be put in place. So I think the venture capital has a role here, but there is a great, I'd say, a big chunk of clean tech, if you will, that's not very well suited for what venture capital does well. And so there's a real need for innovation, I think, from the policy and the regulator side of things to help that.
Super.
Yeah, if I could just jump on that, because I totally agree with you. The most important thing in an early stage company is you can't force a timeline. I mean, you can talk to each of these entrepreneurs. I guarantee you it's taken more time to get to where they are today and costs more money. And the venture capital role is not that runway of capital. There is an important point at somewhere along a catalytic fundraising or loan or something where there's a glimmer and an alignment of the economics where all of a sudden you're willing to take that leap. But venture investing is not about being the ATM for early stage and trying to solve a global problem. This has to be, venture capitalists will step in at all the little points where there needs to be risk capital, but there has to be an alignment of what the time frame and what the end game is. And I think it's funny because when we were talking about this panel, it's like, well, how can venture help solve this problem? I mean, it falls into venture finding the companies like this. And I think it's these kind of forums that create an ecosystem of collaboration. Like I have somebody for you to speak to tomorrow, and I didn't even know you existed till today, right? And it's that web that gets bigger and stronger. And, these huge conferences are great, but it's the interconnections where you see the change and you get the opportunity where then venture risk comes in.
So great, we've achieved one thing today, Mark, anyway, that's contact there, which is great. So it's not all about VC, fine, but we need significantly more funding. And the BBB report that Jenny was talking about earlier talks about in the UK alone, we need to increase our annual capital expenditure from 10 billion to 50 billion. And then you obviously look at that from a worldwide perspective. I mean, it is in the trillions. So Greg, where's the money going to come from? Who's going to be investing? How are we going to encourage it into this space if we're actually going to meet the objectives that we want to?
That's a bunch crystal ball. Interesting today, fantastic businesses, most are funded outside of Scottish Enterprise and the bank internationally. I think that Thus is the problem. So most large LPs consider the energy transition a new space and of risk, and actually the herd has moved to mega funds completely. Those mega funds need mega investments, all to try and identify the unicorns, or looking at SaaS-based business model. So there's a complete funding vacuum if you're in equipment and in the CapEx budget. It's really a dead space. So I think there's a job here. I mean, Scottish Enterprise and the Scottish National Investment Bank are doing a fantastic job. I think there's more that the government needs to do. Scotland, has been and hopefully will continue to be a centre of excellence for energy finance and technology. I think there needs to be some further changes in terms of the government through policy, supporting more new funds with specialist investors who can make the right calls. That has to be right through the spectrum, from university accelerator, seed, all the way through to private equity. Because if you look at this in a global context, the world's consumed about 170,000 terawatt hours of energy in 2019. UK's 2,377, 1.3%, Scotland's about 10% of that. So no matter what we do here in terms of the climate change, we don't move the global impact needle. What we do have is fantastic ecology, fantastic talent. We should put the policy in place, prove the technology here, export, grow fantastic businesses, internationalize. That's our opportunity. And if we create that right ecosystem, we will suck in capital. If we don't, capital will flow to other regions which are making an attractive ecosystem. I've probably not answered your question directly, but there is a huge opportunity there.
That will do. And first, we are starting to run out of time, and I'm going to be getting pointers soon. I just wanted to pose one more question to the panel, if I could. So we have seen a large growth in ESG-related funds, either marked sustainable or green, but the reality is a lot of them are not actually delivering at the level that we need them to. So if you look at the CEDP research, which came out recently, they looked at 60,500 funds across the globe, and only 158 of them were aligned to a 2% pathway to C pathway even, and 102 of them to 1.5, and actually 60% of them were aiming to 2.75. So we're not all going in the same direction. So how do we start to encourage the funds to be truly green? So how do we ensure that we are fully aligned to make sure we can deliver? It's one thing, I guess greenwashing was mentioned in one of the sessions earlier. There's a concern from a company point of view, concern from a funder point of view. How do we really move in that direction? Any thoughts? Jason, maybe you first.
I think that greenwashing is potentially a really bad issue. I think if companies are delivering, if you just put your hand up and say, I want to be carbon neutral by 2050, it's probably going to be somebody else's problem to solve down the road. You take the credit up front and somebody else figures it out. But I do think there's been a huge shift. So we started this particular investment portfolio 4 years ago. At that moment, IGS's technology was not competitive with a lot of the areas of the world where it would be useful today. And I think technology is aiming at a lot of the problems that will be investable 4 years from now, 10 years from now. But it's society's change, right? How many people 10 years ago would have paid $6 for a cappuccino at Starbucks? Or better in this zone, $5 for a head of locally grown kale in our case, Whole Foods. And like society is changing, and the younger generation is all about green and all about putting their money where their mouth is. I like to joke around in New York. The only thing more popular than carbon right now to talk about is crypto, and that's because Bitcoin's at 60,000. 5 years ago, that wasn't the case. So carbon is going to have, and decarbonization and some of the stuff we heard last night in the lectures, this is just part of our new investment framework. And again, you can't force a good investment, but people will see if their investors are holding them to not investing in carbon or fossil fuels and to go out in the world and find interesting companies like these four. I'm a believer in capitalism, and I have FOMO on missing out on good early stage ag tech companies. we're going to be looking, and the world will be looking, and I think it all works together that way.
Green capitalism, that'll be. Ian, anything from you on that?
I think it's got to work both ways. I mean, we've obviously heard, this super funds talk about ESG and how they're, going to raise billions off the back of that. But I think to a certain extent, people don't really understand, years ago, as part of it, you'll invest and you monitor it, but what are you going to do with the data, and how do I, understand that? So I think you've also got to start then from the bottom up. So if you're a fund and you're making investments, you have a policy, you have a way where you invest and you report, so it all starts to filter up. But then you've got to report it in a format, that makes sense, not tons and tons of data that people just sort of look at and basically yawn. So they have to understand what it is in terms of, tons of CO2 saved, cars taken off the road, saving CO2 from X number of houses, etc. So there's, I think, a way of doing that. And when I started doing this at the Green Investment Bank in 2013, when we invested, we put those schedules which had the green reporting into the documents, and the other banks threw a fit. They threw an absolute fit about it. What is all this green whatever that was going in there? But it's slowly starting to happen. But that's taken, from 2013 until now. So I think we're going to get there, but it's also good to think that, this whole furor has blown up about greenwashing, because I do think, there's a lot of stuff that's just been done for a sales point of view, and we have to get into the realism of this.
Yeah, and consistency is an issue as well, isn't it? Pat, and then Greg, and then we'll wind up after that.
I wanted to comment, I think first, the ESG funds, I haven't seen a specific report, but typically when people talk about that, they're talking about public equities or other publicly traded securities, which is not what we do in venture capital. So a fund that is committed specifically to low carbon is not going to, doing something very different than an ESG fund. So just to say that, I think ESG is the wrong metric if we're thinking about zero carbon. It is not a proactive device. ESG is primarily an exclusion device. There are some mitigation things you can do along each of the verticals, but it's not the sort of stuff we're talking about here. It's not what these companies are doing. I had a very interesting chat with a gentleman here earlier whose company was an investor in Tesla, and he said, it scores terribly on ESG because, the governance stuff is chaos, right? But it's the most powerful, transformational company in the world in terms of driving us towards zero carbon. So ESG to me is valuable, it's important. We subscribe, we do the right things, but it is not the right metric for what we're talking about here.
Thank you. Greg?
So we've developed some special ESG type business. I think it is really important, but in connection with these funds, I suppose the issue would be, are these capital appreciation funds or yield driven? I suspect it's the former, because a lot of ESG stuff doesn't produce so much cash. So cash pays for the pensions. So, and you have to look under the bonnet of what they tucked away in the corners, which is why they push goals out to 2040 and further afield.
Super. Thank you. So unfortunately, we've got a timeline that we need to comply with. There's things happening upstairs. We've had a great panel here, and I'm really sorry I've not had more time to ask some more questions, but they'll be here for a bit longer, and I'm sure maybe with a glass of wine in hand, you might even get some more conversation. So I'll pass over to Danny, who's going to introduce us to our keynote.
Thank you, Kerry, and the panel for a very interesting discussion there. Thank you to Mark to start the clapping off, because that's what I was going to ask them to do, everyone to do, so thank you for that. I would now like to call on the Principal and Vice-Chancellor of the University of Edinburgh, Professor Peter Matheson, to come to the stage. Peter.
Thank you. That Professor Robertson over there is known as Plan B. Because there was a bit of uncertainty about whether I was going to get here in time, but anyway, I did, and I heard most of the panel, so that was great. Thank you very much. So, just an opportunity for me to say a few thank yous, and it does sound as if it's been a productive panel. I heard the fact that there's an important connection being made, so that's the purpose of some of these smaller meetings. So that sounds great. So, audience members, both here today and online. Speakers, investor panelists and companies, Scottish Enterprise, who I know are here in numbers, Scottish Enterprise Growth Investments, and of course Scottish Government, I'm delighted to have this opportunity just to say a few thanks for today's Green Investment and Innovation Showcase. From what I've seen and from what I've heard, it's been an afternoon of pioneering inspiration and commitment to progress, a discussion of action, hope, optimism, innovation and investment, exactly what we need to see. And from the United Nations Paris Agreement reached in 2015 to the 26th United Nations Conference of the Parties, COP26, taking place all around us here in Glasgow, we joined together with the Global Voices for Change in the race to zero and the commitment to keeping 1.5 alive. Together we can play a pivotal role, collaborating with investors from across the globe to bring inspired, ambitious, bold innovation and solutions to market fast for the benefit of all. Together we're capable of enabling a quantum leap, a new industrial revolution powered by sustainable innovation and driven forward by impact investment at scale. Collaborating across Scotland and with our national and international partners, networks and friends, we can increase the flow of the innovation talent pipeline and connect that vital pipeline with the global investment community to deliver our collective commitment. So on behalf of the University of Edinburgh and the EIE team with its home in our Bays Centre, which is the first of 5 capital projects under the data-driven innovation aspect of the Edinburgh and South East Scotland City Region deal. It's a bit of a mouthful, we call it the City Deal for short, but it has 5 data-driven innovation hubs. The Bays Centre was the first to be completed, and that's where EIE is home. So thank you to everybody that's contributed. Thank you for the opportunity for the University of Edinburgh to be part of today's showcase. And thank you to everyone who's joined in what is obviously an urgent and important conversation. Finally, and most importantly, thank you to all of those who are and who will be the pioneers and the architects of our collective and successful journey to net zero as we focus on making the world a better place by addressing tomorrow's greatest challenges today. The University of Edinburgh is proud to be part of that journey, but we recognise that we've only got a small contribution to make, and most of it will be done by collaboration with experts elsewhere. So thank you for joining today. Thank you for allowing the University of Edinburgh to be part of your discussions, and I wish you all every success with what is, I think, a really important set of missions for the next few years. And with that, I think I'm the only thing stopping you getting to the drinks reception. So thank you for coming, and I hope you have a great evening. Thanks.